Investors love SEIS and EIS. These are government programs designed to encourage investment in UK startups by offering investors incredibly generous tax reliefs. In this video, I'm going to talk about SEIS, but if your company is more than 3 years old, you might want to check out my other video on EIS, which is for slightly more established companies. SEIS stands for Seed Enterprise Investment Scheme, and with this, startups can raise up to 250k. If you want to raise more than that, you can always start taking on EIS investment once you've hit the SEIS funding limit. But SEIS investment has to come first. You cannot claim SEIS relief once EIS has been claimed, just HMRC's rules. So why do investors love it so much? Firstly, they can claim income tax relief on up to 50% of their original investment, up to a maximum of 100k. Then there's capital gains tax. We're talking disposal relief, meaning that if they hold on to their SEIS shares for at least 3 years, they'll pay no CGT on the gains. And reinvestment relief, meaning that if you've disposed of another asset, so maybe you sold a property or a business that would usually give rise to a chargeable gain, and you reinvest that gain into SEIS shares, 50% of said gain, up to a maximum of 50k, will be exempt from CGT. But that's not all. If things don't go to plan and the business fails, the investor can offset their loss against either their capital gains tax or their income tax bill, whichever suits them. Let me run you through a quick example. Your investor has put £100,000 into your startup. They can claim 50% income tax relief. That means only 50k of their capital is at risk. If the company goes into liquidation, assuming they pay the higher rate of income tax at 40%, their loss relief will be 40% of 50k, which is 20 grand. So here's how you go about getting investment under SEIS. Step 1, check you're eligible. Generally speaking, if your company has a permanent establishment in the UK, has been trading for less than 3 years, is not listed on a recognised stock exchange, has fewer than 25 full-time employees, and gross assets below the value of 350k, it's probably eligible for SEIS. There's a bit more to it than that, like rules around subsidiaries, but that should give you an idea. Go to our website and take the quiz, as that goes into the nitty-gritty. I'm just here to give you an overview. Step 2, find investors. If you haven't got someone in mind already, watch my other video, How Can I Find Investors for My Startup, for some top tips. You'll need to have the name of a potential investor to proceed with step 3. Apply for advance assurance. Advance assurance is a no-brainer. It's not compulsory, but you'd be crazy not to. Advance assurance is a bit like getting a mortgage in principle. It gives the lender, in this case an investor, peace of mind that their investment will qualify for SEIS tax relief. You can apply for advance assurance easily on the Vested app. Once you've got the green light from HMRC, it's time for step 4, get organised. Funding rounds involve a lot of admin. It's not fun, but you have to get it done. With Invested Raise, you can access the business and legal docs you need, put everything in a secure data room, which you can give your investors access to, model future scenarios, issue shares to investors instantly, and much more. So do check that out. In the meantime, I hope you found this video on SEIS helpful. If you're interested in EIS, check out my other video. I've included links to the resources I think you'll find helpful in the description. Don't forget to like and subscribe for more startup content.